Hello and welcome. And, we'll start at the top of two with a corporate conversation. We have with us Sreekanth Nadella, the Managing Director and CEO at KFin Technologies, to talk to us about how the Q3 numbers have shaped up for the company. Srikant, great chatting with you. Let me first start off by, and good having you first off. Let me first start off by understanding how Q3 has gone for you in terms of a trend. Your growth with regard to the top line was around 28% on a YOY basis. Margins, though, have come off a little from those highs. Talk to us about both of those trends on what's played out on the top line and on the margins.
Thank you so very much for having me over here. Very good afternoon to one and all. Interesting quarter full of milestones for us. Completed the acquisition of Ascent Fund Services, an entity which is based in Singapore but present in 18 different countries across the globe. This is yet another formidable and a concrete step for KFinTech in its journey to become a global fund administrator. Consolidated top line has grown 28%, as you've stated. Consolidated EBITDA has grown over 16%. PAT, of course, as you called out, is slightly under the weather, and that's largely on account of certain accounting adjustments, non-cash related items, which is one-time in nature. So to that extent, I wouldn't reach too much into the PAT numbers. The acquisition continues to be EPS accretive for us into the coming quarters. Even without the acquisition of Ascent, the core revenue of KFinTech had grown over 12% and margins in line. So by and large, satisfying quarter. Core business, which is mutual funds and issuer solutions, continues to grow. Issuer solutions, especially on the back of buoyancy of IPO markets, has grown over 22%. Our younger, faster businesses, that is alternate investment funds, international business, pension products and solutions, as well as tech-driven revenues, have all grown over 30% year on year. Overall, a quarter that I'd like to believe will, set the pace into the coming year, into FY27. We are very eagerly looking into the 27, given all the synergies that we anticipate to drive between KFinTech and Ascent Solutions globally.
Very interesting. Srikant, when I'm looking at the progress you've made on Ascent over the last year, the growth has been absolutely stellar. Talk to us about, and before I come to the numbers, just in terms of the client growth as well as with regard to AUM growth, which is extremely strong, talk to us about how much Ascent contributes to your current top line. So if I'm looking at your current top line, it's at roughly 371 crore currently on a quarterly basis. So that's the kind of clip that you're clocking quarterly. Out of that, what's the component from international? What's the component from your existing domestic business?
Sure. Just to give a split of revenue, domestic mutual funds continues to be our largest breadwinner. About 60% of our total revenue comes from there. Within that, about 600 basis points of revenue is non-AUM-linked, which means it is additional solutions on technology and value-added items that we work upon. If you take that aside, just purely market-linked performance is about 54% for KFinTech. Ascent, out of the 370 crores, is roughly about 48 crores, right? So it is still, small in the context of scheme of things. On an annualized basis, the revenue, Ascent would probably look to be around, $30+ million into the coming year. But if you add that to KFinTech's organic international business, it would now be over 20% of the total revenue for KFin Technologies. Bearing in mind that this business did not exist, as recent as 5 years ago, we managed to orchestrate about 20% of international revenue and pensions and other assets, which is another 10% plus. So about 30% of the total brand new revenue is something that we have, orchestrated in the recent past. Part of it is through acquisition, but a lot of it is through organic channels. Every other business, with the exception of mutual funds, and issuer solutions, is growing 30% plus. Issuer solutions too has grown over 22% year on year. Mutual funds, I think, because of the base effect in terms of certain extraordinary discounts that were given at the beginning of the year, would come back into the coming year to show tangible growth compared to this year, right? We are also expecting, with any turnaround on the markets, the retail participation in the secondary markets will increase, and as that happens, there would be significantly higher tailwinds into the issuer solutions business as well into the coming year.
That makes sense. And if I were to, so roughly 50 crore is your top line coming from Ascent. What is the kind of growth clip that you're expecting this business on a standalone basis to grow at? You're doing roughly 200 crore annualized on this. So where does it go to from here?
Um, so So Ascent is a brand new organization, created by excellent founders coming together in about 5 years back, and from zero base to get to about close to $25 million run rate in a matter of 4 5 years, opening 18 countries and delivering fabulous value to many fund managers across private equity, venture capital, digital funds, as well as on the hedge funds. I think speaks volumes about the maturity of this organization per se. They've been growing at a clip of over 30% on an annualized basis. We believe that should be a reasonable expectation to grow from here on, though I anticipate a much higher growth potential being existing there. Mindful of the fact that out of the 18 countries, about 8 countries are incubated just very recently, right, in the last 12 to 18 months. And in terms of new contract wins and driving growth, and that includes some very large geographies, including America. As they expand, we should look to see not just in percentages, hopefully in multiples, soon, given the base is small. But on a base case, we look to be Ascent to grow around 30% plus at the minimum. While this is on the top line, margin management is extremely important as well. The entity turned a corner into the previous quarter by turning cash positive. As with every acquisition that we do and a transformational initiative, we expect within 36 months the entity to deliver to similar EBITDA profile as KFinTech, the holding company, delivers at this point in time.
Okay, and that's 36 months from last year because you acquired it last calendar year, Srikant.
Yes, no, actually, October 13th of this year, we
Perfect.
have completed the contracting piece, but mindful of the fact that this is a highly regulated space, we needed to secure regulatory approvals from all the administrators, including the governments of Mauritius and Dubai, Abu Dhabi, Singapore, so on and so forth. So that process took a little while. It's only in the month of October that the fructification of the entity has happened, and we started consolidating the books.
I'm trying to get a grip of the fact that on a very small base, multiple countries as an opportunity, and the kind of synergy that KFin offers with Ascent. Whether this 30% growth clip, are you being conservative here?
Yes, I think it's, as I've already called out, we believe the growth potential is substantively higher, right? I mean, it's important to understand the journey of a fund administrator, which is our world, into a new geography. It is a business which is entirely based on trust, and brand equity is also a very big factor. For example, if you want to get your books audited, you will go to a big four, and it lends a certain sense of credibility. And exactly the same in the case of fund administration too. So there is an incubation period of about a year to year and a half, during which time we establish our base, we drive our brand, we win the seed clients, deliver fabulous value, and that is when you start seeing mid to large size funds to cut over in terms of the value proposition we add. The single biggest value proposition we add is frugal engineering driven, phenomenal, and predictable, outcomes at a significantly lower price point compared to many global fund administrators. So that is the value prop. And given that, the medium and the bigger funds look for this about year and a half incubation. They wait and watch and see how the performance of a new fund administrator had been. Thus far, it had been exceedingly good. And as that moves forward, definitely as you sign a larger fund house, the revenue increase won't be in percentages, but will be in multiples. For example, if I were to sign up with a $50 billion fund versus a $250 million fund, as you could imagine, the revenue would be in multiples. And that is exactly what we are looking at. We have scooped up many small tiered funds pretty much in many of the geographies. We are looking to target medium to large sized funds at this point in time, which is what will drive hopefully a percentage growth beyond 30%.
Okay, and I'm trying to understand the growth clip of the current business. You've got a very decent market share in the mutual fund space already. Will now the trajectory just be the AUM growth that some of your clients clock? Will your top line largely be linked to that? Do you try to win new clients, and how likely is that? That's first part. Second part, how much of your top line of around 320 crore, excluding global or excluding Ascent, is linked to AUM? If you can give us a sense of that.
Definitely. So I think in terms of market share in mutual funds, you can measure it based on number of asset management companies you serve. It can be based on the AUM that the clients, based on which our commercial model is driven by. It can be also measured on the number of folios, investors, multiple different cases, but purely for commercial reasons, it is simpler to measure the market share by AUM. And within that, AUM is one of the multiplier. The other multiplier is the yield that you derive from that particular AUM. So, yield multiplied by the AUM is your revenue in some sense. Our market share increased from about 30% in 2020, now about 32.7%. So there's been a steady increase in market share. That is a combination of outperformance of many of our clients. In addition to us winning several new AMC mandates into the past 6 to 7 years. And obviously, every new asset manager eats into a little bit of market share, and that drives revenue. In just a quarter that had gone by, we have signed 2 new AMCs, Nuvama and Monarch. And to that extent, we will continue to have a significant focus to win nearly every mandate that gets launched. Because the funds take a fair amount of time to establish and drive their core AUM. In fact, for the first few years of any new sign-up, it's actually margin dilutive. But as the scale of that particular AMC increases, that is when we tend to recover some of our initial investments and then hopefully turn into profitable business. So we continue to track to addition of new AMCs, which hopefully will drive AUM expansion. But then again, there are a plentiful number of things that we can do to help the AUM expansion, even with our clients. A lot of that goes in terms of our investments into digital, in terms of transformative solutions, which will help our clients to grow faster than the industry. And I think that is where we pride ourselves in being, digital first and now AI native first in terms of creating those excellent business solutions, which helps our clients to grow faster, which in turn comes back to help us in terms of our revenue growth, given we charge certain basis points on the overall AUM. So to that extent, I think the market share will continue to expand on both fronts, number of AMCs, as well as us actively helping our clients to grow. But otherwise, it's fair to say that bulk of the heavy lifting in terms of model needs to be driven by our own clients and us ably supporting them in terms of technology, operations, and compliance. In terms of market share for issuer solutions, we have inched from 46% to now 51.4% on the Nifty 500 companies, which is substantive expansion in a matter of 12 months. And we believe this trend will continue as our overall market share of new IPOs is significantly higher. We have also started to expand our focus into SME IPOs and not just the main board IPOs, which is what we were traditionally being tethered to. And that also is adding. Then again, a significant amount of our revenue associated with the corporate actions, again, is dependent upon the health of the corporate India, which in these 9 months had been satisfactory, probably not as good as it was in the previous year. But with the retail participation coming back, hopefully with the markets doing better into the near term, we should do much, much better. Our market share in alternate investment funds is 39%. Our market share in pensions has been significantly rising, and it increased from 9.8 to 11.4% in a matter of 12 months. We are growing at 3 times the pace of the overall industry in the case of national pension system.
Okay, thank you so much for that, Srikant. It's been a long but a very fruitful conversation in understanding what's playing out with regard to KFinTech. Thanks so much for joining us and giving us that perspective.
My pleasure.
Okay, viewers, what we'll do is to a very short break. That's the conversation with KFin. Of course, markets in the green, despite the kind of headwinds we've seen from global cues coming in this morning. But we'll have a very interesting conversation. On the other side, we'll talk markets. We'll have Dikshit Mittal, Senior Fund Manager, Equity at LIC Mutual Fund, AMC, to come and speak with us with regard to what he's seeing in terms of markets. Stay with us.